Equity markets, they're a sea of red and more blood could be spilt ahead with the two large uncertainties in the air next week, the US election and the Fed's decision on interest rates. Welcome to The Daily. My name is Jessica Amir, a market strategist with Moomoo. Well, the closely watched and traded NASDAQ 100 down 2.3% overnight. The broader S&P 500 down almost 2%, their biggest one-day drops since early September, while the Aussie share market dropped like a stone at the open, down 1%. That's our biggest drop in a week. But what's going on? Well, we've been speaking about, I guess, the big warning signs for markets coming right towards us. We covered this again yesterday. It's almost as if markets have been, driving down a metaphorical freeway with signs coming right toward us saying steep descent ahead, and then bam, what we saw overnight was the market's fear gauge, the VIX, that rose to its highest level, risen 17% in 3 days to a reading of 23. This basically suggests that options traders are betting more downside is ahead. Importantly, remember the last time the VIX index rose this high and this fast, markets then fell 10%, but then they recovered. So it's not all doom and gloom. Also keep in mind most of the stocks in the US were higher overnight. Intel, a standout, up 7%. Amazon, of course, a huge standout there in the Mag 7. Their shares up 5% after hours. But a couple of really important things to note before we get to the finer detail. Firstly, remember markets are forward-looking. So although from the outset we did have big tech companies, Apple, Meta, Microsoft, they joined the broad S&P 500 in reporting stronger than expected profits. That's good. But they all guided for less revenue expected. So that's why markets are now under serious pressure. They're adjusting for slower growth ahead. That's why the NASDAQ is down 3.5% in 3 days. Microsoft lost 6% overnight, Meta down 4%. So traders, money managers, they're readjusting their portfolios and their books, preparing for slower revenue growth ahead from the world's biggest companies. That means taking profits off the table. Secondly, consider it is not all doom and gloom. The Fed's preferred inflation gauge, that came out overnight. PCE fell in line with monthly expectations. This is good news for equity markets. It suggests the Fed can probably cut interest rates as expected by 0.25% next week. Thirdly, consider Amazon. This is good news. The world's second biggest cloud company, they guided for far stronger than expected profits ahead. Wait for it. They said they're going to devote $75 billion in capital spending, mostly tech infrastructure. So guess what stocks that inspired buying in? Well, Amazon shares, of course, rose themselves after hours, as we said, but it also inspired dip buying in NVIDIA. After hours, NVIDIA shares up 1.2%. Now, this suggests that NVIDIA could recoup some of the losses that it made in the prior session. It lost 4.7% in normal trading on Thursday. Meanwhile, do keep in mind that Apple shares are lower after hours trade. Apple, importantly, the world's biggest tech company. Apple shares down 1.8%, but that's not as much as expected. And that's The Daily.